Lakshmi Iyer, Chief Executive Officer, Investments and Strategy at Kotak Alternate Managers, joining us on the phone line. Lakshmi, that is in fact the question. Do you think that this is a precursor to a rate cut next week?
Hi, good morning.
Good morning.
I would say this is the season of Kumbh. I would say we have a Triveni Sangam happening at Prayagraj. We are having a Triveni of measures by the RBI, and well, this could probably be a precursor to more easing, because it's a combination of liquidity measures, which is quasi rate cut, and an actual rate cut impending, no doubt. I'm still torn between, calling it out totally for Feb. I'm not very sure, but definitely between Feb and April, one rate cut seems to be there for sure.
Okay. Lakshmi, good morning. Do you reckon the markets will take these moves as cheerfully as your voice is sounding right now? Frankly, that was the highlight of the morning thus far.
Oh, without a doubt, without a doubt. I mean, the holy dip is equally exciting as the market dip in yields. So, definitely.
Are you in Prayagraj right now?
No, I was there last weekend.
Okay, fine. Okay, figured. Okay, but yeah, sorry, please lay out the market impact for us, Lakshmi.
So a couple of things. One is, as Pallavi rightly alluded to, 3 lakh crore of deficit liquidity should definitely get some support, number one. Number two is, crude oil prices have been easing, risk of sentiment across the globe. And of course, these measures that we saw late last evening, the critical thing is the open market purchases. Some of them have been happening already through the secondary market. A combination of secondary and primary purchases bodes very well from a demand anchor perspective at a time when FPIs are absent. So I think it's definitely positive for a gap down in yield opening. We could expect the yields in the market go probably closer to 6.6 levels and maybe even lower.
Lakshmi, just one question from my side. Tamanna here, and really, it's a pleasure to hear your cheerful description of this in the morning. Just lifts our show, so thank you for that. But trying to understand in terms of impact, is it enough? And yes, what the RBI has done in terms of easing liquidity is great, but this has been a long-standing complaint. So when you say that the tap has been opened, is it a trickle or a gush, and what more could be expected?
I would say it would be a cusp of a trickle or a gush. It cannot be that it's going to be, because we've already seen a CRR cut, in December. That's number one. Number two is the US has already cut rates close to about 100 basis points in the last year. And therefore, I think the window of combination of liquidity easing measures, which will definitely have positive bearing on the yields, and a combination of rate cuts, which is definitely seen as pro-growth. I think both of these have to work in tandem to ensure that the economy is well nourished, both from a liquidity standpoint as well as a growth standpoint.
Okay, very last question, Lakshmi, and this is, unless Neeraj and Tamanna have more, but do you anticipate that this is going to be a shallow rate cut cycle, and what is your base case assumption for the cuts this year?
Well, we are penciling in a cumulative of 50 basis points rate cuts for this year, that is calendar year 2025. And yeah, to that extent, the inflation war, I don't think is completely over, though the next few readings are definitely going to be on the softer side. So therefore, yes, if between, a series of deep rate cuts versus going in for 50, I think I would still root for a cumulative of 50 at least this year.
Lakshmi, thanks so much for joining us this morning, speaking about the dip in the Triveni Sangam as well as the liquidity in the banking system. Both were equally insightful.